Hey guys, Sensei here again, Crypto Vader X and also the MetaTrader family. No, this is not a video about crypto. This is a video about stocks, because we are big in IPO. So in order to prepare for IPO, wouldn't it be good if we know what's happening in the stock market? So I went to this event in Maybank and I split this video into two portions. The first one is the overall global macro, because you need to know what's going to happen in the big world before you zoom in down to Malaysia and what are the specific areas and sectors that are about to boom. So let's start the first session first by looking at the overall big picture so that you are convinced that Southeast Asia has many components to make it very, very successful. And actually, we are insulated from all the big things, all these messy things that are happening to the world today. Southeast Asia it is, and why we will be successful this year. And it's going to be led by who? Guys, semiconductors, of which Malaysia is so... Hey guys, what up? Guess what? I am in the Maybank event today on IPOs and also stocks, okay? They are gonna go through some review of the Malaysian stock market, and we want to know, after the suffering we went through, right? We want to know what happened, and you're gonna see it in this YouTube video. The thing is, I think the sentiment is quite weak. It's supposed to start, and that's the problem here. You don't see a lot of people here. I was just busy outside eating. I don't think this is the full house, which is very rare. So this is more interesting because we want to see what to do when the sentiment is just not good, because the IPOs we got whacked by CPE, and for the stocks, well, the Dr. Yu and also the SCIB man burned a lot of us, right? So let's see what tips Maybank has for us in order to move forward, if we ever do move forward.
Ultimately, with the risk that I said earlier, there's something that we cannot avoid, but we can manage. Where are the three opportunities? And followed by the Q&A. So what I'm going to do here is that I'm going to do some fundamentals. Fundamental, it means there's a combination between fundamentals, because fundamentals will set the tone of the major trend to come. Fundamental will set the tone of the major trend to come. But when I include technical, it gives me the timing to do that. So I'm just going to do exactly what is fundamental. I'm going to do a recap of what we have shared. First one, which is the geopolitical tension. I will take about 5 minutes to explain the situation and what's the implication to the market, definitely. So now, since 2022, the dynamic of the market have changed because of these three things: geopolitical tension, inflation, and possible recession. Since 2022 and since 2023, and 2024, unfortunately, is still in the mind of many investors and traders. These three things have not gone away. It will still lingers around, especially all of them. There's no one. Political risk is still real, and in fact, it is now happening. As I was having my breakfast this morning, a quick one, I was reading news. So what we have read, I think we all know that UK also joined in US to manage the situation in the Red Sea. So what happened in the Red Sea, let me just give a recap here, is that November last year, starting in November last year, the Houthis start to harass the vessel moving across in the Red Sea. Now, we have to understand here is that the export from Asia, mainly Asia, to the European nation through the Pacific Ocean around here. Now, go through this Red Sea and go through this path, a very narrow path called the Suez Canal, and we do our Asia export to European markets. So this is a very important route. So what happened here was that last year in November, the Houthis started to harass a lot of ships. And by doing that, and what I read from the conversation article is that about 60% of the shipping merchants or shipping lines have, because they do not want to be harassed, so instead of going through the short path to Europe, they do a reroute to the Cape of Good Hope in Africa and all the way to European nations. And just by doing that, it requires another 8 to 18 days of shipping time. And just by doing that, you increase the cost, the fee, the oil or the gasoline to power the boat or the vessel too. And that will increase the cost. And that may also increase, or there's a delayed inflation to come. The inflation of US started to pick up. They blame it on the supply chain. So is the Suez Canal crisis or the Red Sea crisis. There's a disruption in the supply chain. So back then in COVID-19, when it started, we experienced a global lockdown. So there's a disruption to the supply chain. But when did the inflation in US bounce up from 2% to break above 2% to 4%? It was in April 2021. COVID-19 started in beginning of 2020, but it took 1 year, 4 months for us to see that the US inflation break above 2% to 4%. And the rest was history. It went up to 9% in June 2022. What I'm trying to say here is that whenever the disruption, based on our short history of understanding on the COVID-19, it caused a disruption to the supply chain, it will take a while for the inflation number to pick up. So do look out for numbers, the subsequent numbers. And this is, I think, something that we should be concerned about. Last of all, will that cause a delay in recession? I think a lot of economists are being mocked for 2023, that most of them say that recession may hit, but nothing happened. But they're not wrong exactly, because the GDP did go down, but it didn't trigger a recession. So can I say that there's a possibility that this recession may be delayed to 2024? Maybe. So again, we're not in the business of predicting, but we can forecast, use whatever variables that we have, we know, and if it happens, we got to act accordingly. In 2022, now I wanted to take a close look at this NASDAQ chart, which I updated it this morning. It closed at 17,438. It's still about the same level when I prepared this on the 8th of January this year. Now, do you notice that over the last decades, 2 decades, the NASDAQ or the US market have this very nice, smooth exponential curve. Very beautiful exponential curve. But when was this curve being disrupted? The beginning of 2020. What was the cause of this disruption? So in 2020, on the 3rd week of 2020 to be specific, I recognized that the US market became volatile. Volatile is good because volatile means that you move up and down. Move up and down means that there's a lot of trading opportunity. That's what I recognize. Before 2020, I was a passive investor, buy and hold. But things have changed. We have to recognize the change and act according to the change. So volatility may not be a bad thing. Now, let me just look at what happened here is that when we recognize volatility, I say that volatility started at the 3rd week of 2020. It's always good that when you have a proposition, you add the word because. When 2022, it get more intensified. Okay, so that was at the timeline of beginning of 2022. Then inflation was already a concern because in February 2021, it was about below 2%, and it hit the high of 7.53% in January 2022 at the beginning. But market was at high, so I became to be very suspicious. What is happening? And then at the beginning of 2022, we also saw that there's a risk of a recession because the GDP in US was 12.5, then it dropped very quickly to 3.7%. Why drop? What is the strategy here is that we have to recognize where's the immediate trend. Immediate trend is in 2022 is up, or it was down. In 2022, I recognize it was down. Then basically the strategy is that my focus will be sell on strength, on the cash down. And in 2023, that's where we have discussed here in this place. That was in February last year. I give my projection of 2023. Basically, I think that at least for the first and second quarter, it is bullish. There's an immediate trend forecast. Then as a trader, as an investor, my focus is to buy on dips. So just remember, recognize where's the immediate trend. If the immediate trend is up, you focus to buy on dip. If the immediate trend is down, I will try my best to focus in selling into strength. Now let's do a recap of what happened to 2022. And just do a subject study about the micro NASDAQ. Of course, you can approach the derivative team of MAYBANK Investment. Now, how you hedge buying the dips? And that's where last year, this time, down here, we share about our market outlook. My market outlook, at least for the first and second quarter, last year, around this period, is to buy on dips because the trend have changed. Now let's study into the fundamental at the beginning of 2023 and also to combine to confirm with the technical reason last year. Why we are quite right in the direction of 2023. Now, so what I did was with Maybank, that's why I say I'm very excited to share, to come here for 3 weeks. I'm excited when CME asked me to come. So last year, we shared in Kuantan, Ipoh, KL, JB, and Kuching, and this is exactly that. So that was the end of 2022, the beginning after the Chinese New Year last year, that we saw the whole year of 2022 technically was downtrend, but after Chinese New Year, it broke above. So technically, give me the timing that, hey, perhaps in 2023 is up. So I'm seeing at least for the first and second quarter, the immediate trend for the US market is up. Why? Let's go to fundamental reason. Now the fundamental reason is because, it's always because, right? If you have a proposition, add the word because. You've got to convince yourself why. Now because is that I know that the June 2022, the US inflation hit a high of 9%, and that was the highest. Then in January 2023, the inflation come down very nicely to 6.4. So that was a good improvement. From 9 to 6.4, this was a good improvement. It means that we focus on any dip, which after 8 of Jan, when I prepared this, on 9 of Jan, the market did come down. So that was a buy on dips moment. And today, the market did broke this high to 17,400. So in a way, we are right. Technically, it's still buy on dips. But fundamentally, we have to be prepared because the scenario of the first one already happened, the expansion of geopolitical risk. And this is just one part, the Middle East crisis, the Red Sea crisis. There's another part to it, which is the China-US trade war. It's still ongoing. From a trade war, they have developed into Cold War. What's the difference between trade war and Cold War? It's between husband and wife, boyfriend and girlfriend. When you have war, what do? You block each other, you make things difficult for each other. That was then. But in a relationship, it's bad when you develop into a Cold War. That means you don't talk to each other. Communication breakdown. And that's a worst case scenario for ongoing relationship. So the other geopolitical tension is still ongoing is the risk of US and China trade war. Then after that comes with the Russia-Ukraine war. That's another geopolitical risk. Then of course, recent one is the Middle East war, which will expand to the Red Sea crisis. So all these geopolitical war of tension is still ongoing. And number one have already triggered in a small magnitude. But when that translate down to a U-turn inflation, do keep a lookout for the next many months of CPI. If you're gonna ask Jerome Powell, let's say today Jerome Powell is standing here. I'm not. This figure is not Wong Kong Hao, it's Jerome Powell. Then if you ask Jerome Powell, Mr. Powell, what do you think that the end of the 2020-24, the CPI will be? You know what will Jerome Powell tell you? I track his word for word literally. So every time he's meeting, what I do is that because you have to listen to this lion's mouth, not the reporter. So every time he's meeting, I will look through his video. You can search on YouTube, and then I will also Google about FOMC conference transcript. I hear his video, I look at the transcript word for word, I cut and paste, and it's in my archive. Now he said, if you ask Jerome Powell, what will be inflation at the end of 2024 in December? And will you cut or hike interest rate? You know what he's going to tell you? I became so much of him until I can tell you what he will say. It will depend on the totality of the incoming data. Meeting by meeting and the volume, but when option pick up, it means that the players are hedging. When players hedge, it means that they're not very sure on this uptrend. So this is what I've read from the market, just to give you some ideas what's happening to the market right now. Okay, so I mentioned about the 3 risks. I hope that you enjoy this. So where is the opportunity in US market is to trade it. So itself, when market is volatile, is an opportunity. How you manage it is that I would advocate that do not be a passive investors in the US market. But if you want to be a passive investors, I have a proposition, is the Malaysian market, right? Asia market. I can afford to be passive. So Mr. T will share more. And again, I'm excited to hear from him. Okay, let me just touch on the commodities market. US market is to trade there. I think there's a lot of trading opportunity in US market. Now, commodities market is to buy them. Since the third week of 2020-22, my mandate is the same until today. Now, let's take a look at the different commodities, and starting with gold and the rest of them. And I always say that gold is the leader of all commodities. As long as gold maintains the high point, rest assured, I think the rest of the commodities will follow subsequently in years to come, according to the time and season. Okay? Now, let's look at commodities then. This one, you can check your broker how to understand. You can trade the commodity gold futures, which is not too difficult. This was in 2001, 24 years ago. And this is a quarterly chart of gold, which I prepared on the 9th of January. Today is still about the same. At the close of last year, I think the last trading day was 29 December 2023. At the close of last year, I recognized that gold have some interesting phenomena technically. Maybe just spend a few seconds to analyze this quarterly chart of gold over the last 24 years. What can you see? Something was interesting at the close of 2023 that never happened before. So it gives me an idea that technically, even more, I want to buy on dips for gold. What do you see? Of course, I'm not going to ask you, but I just want you to think. Yeah. 2021, the gold tried to break above 2,000, and at the end of that quarter, it failed. Okay? They tried to break above. There's a mandate in the marketplace. They try to break above. And then they try again in 2023, somewhere around there. They tried, and the quarter close, it failed again. Then towards the end of 2023, they tried, or maybe the second quarter, or third, I think it's the second quarter, they tried to break above 2,000 and it failed. But something interesting that the quarterly chart at the close of December, it finally, for the first time, it closed very convincingly above 2,000 US dollars. So technically, it gives me a confirmation that the price behavior study is that the gold closed very firm, and I think it's ready to run, to buy on this. So basically, what is gold? In my opinion, gold is just beyond commodities. Gold is a currency. Gold is a currency against many other currencies that are into printing of money. So as long as the currency remains weak, gold should go up. So it is a currency pair. It is a currency pair for gold. So it's just to understand that. So over the years, you can see that since the year 2000, gold has been going up. If I'm going to compare to gold and Dow Jones, in the year 2000, Dow Jones was 10,000. Today, Dow Jones is 37,000, about there. So over the last 24 years, have grown about 3.7 folds. But for gold, over the last 24 years, we have grown at least tenfold. Why? Inflation. And you're going to ask yourself, why is there inflation? Because the continuous printing of money, not just in the US, many nations are printing money. So that's a risk, that's a concern. So you ask me if inflation is going away, definitely not. Yeah, so the central bank are trying to manage it, which I think there's some success, but as an investor, I'm very cautious to look at the totality of the incoming data, month by month, and the meeting by the Fed. So will come a time and season when we transition from the west to the east, which is already happening right now. That last year we saw that Korea, Japan, and many nations really perch up. You don't wait until it perch up, then you go and chase after it. And Malaysia is not doing that bad. Although the report said that KLCI is flat, I disagree to that. If you look deeper, Malaysia, the FBN 70. FBN 70 measures the mid-cap stock of Malaysia. They are the bloodline of Malaysia. KLCI is the blue chip, the banking stock, all this and that. But FBN 70 is quite a mouthful. Yeah? FBN 70 is the mid-cap stock of Malaysia. It represents the industry of Malaysia. Last year it performed very well. So Malaysia is doing not too bad. So my mandate for Asia is to accumulate them. Don't wait until it bursts out, then chase. Accumulate them, those with good dividends. Of course, again, check with your investment banker here. And I just have to end with this. So I try to read into every meeting. So it's a privilege to be here, Kuala Lumpur. So I go and Google what is Kuala Lumpur. What's the meaning of Kuala Lumpur? Do you know the meaning of Kuala Lumpur? You know? Okay, my version.
Right.
Kuala Lumpur is when two rivers meet. When two rivers meet, it became a confluence. When two rivers meet, it's still a river. But that river became very powerful, very strong, very energetic. So Kuala Lumpur, it means when two rivers meet. So who are the two rivers? First river is you yourself. And second river is the wisdom in investment and trading. So how to acquire the wisdom in investment and trading is this. Wisdom is this. You have the knowledge. But if you know how to apply that knowledge at the right time, you have the wisdom. So my reading is this. All of us individual, we can have the wisdom in investment and trading. Apply all the knowledge at the right time, which I've shown you how to do it. You can acquire it, so you can have that Kuala Lumpur. But yet you must, at the right environment. That's Maybank. You know what does Maybank means? Last year I said that. Maybank, it means, I know it's Malaya banking, but in English vocab, May, it means that it's a place of possibility. With two rivers meet, yourself and wisdom, you need this environment, which is the place of possibility. So with that, we'll move on to the next section. I think many of you will disagree with me, depending on your skills and experience. If I risk two, I make one. But let me just give you a hypothetical strategy here. If you are so skillful that you can risk lesser of the two, but you make many of the ones, that means you're very skillful. Why risk two? Because the stop loss is wide. It should not trigger. But if it trigger, I lost two. But hardly it will trigger. Yeah? So I know it's subjective, but again, it depends on your skill. So if you risk 1:1 or 1:2, likely the frequency will increase. So that's what I'm trying to say here. So it's a very subjective. I do not recommend risk 2 buy 1 or make 1. So you have to search for that river number 2, your own wisdom. Yeah. So at least that's my stand.
Like, for example, now hello, you are talking about the Dow Jones.
Yes, correct.
Okay, your upside is how much? What's your upside?
So you have a very good question. So earlier I said here, if you ask Jerome Powell that's standing here, what's the upside for the stocks? He will say to you what I said earlier. He will say this literally. It depends on the totality of the incoming data. We will go by meeting and decide from then and then.
You guys, very interesting presentation by Con Hao there. So you remember the thing, you got to trade the US market, buy commodities and accumulate Asia, and this makes sense because if there is a hard landing, and there might be one because of all this political crisis, Asia would be the place to be. Even Malaysia, we're pretty well insulated from all this hard landing. I did ask Con Hao, based on the inputs given by Tom Lee, that he likes small caps. So Con Hao said yes, he likes small caps, but he doesn't mention it because it's very risky. If you want to do a small cap, and he does support it, you got to know the company. You really got to know the company. Small caps will be in danger. Most of it will fail, but know the company, use the products, and most importantly, find companies with little debt. So that seems to be the alpha for this year. Con Hao does like mid caps, but you know me, as a follower of Tom Lee, I want to go to small caps. I'm looking at the Russell. And of course, you're trading Asia, look at the FBM 70. That is the index to look at, not the KLCI. Hey, do they have a futures on that? I'm going to find it in my futures terminal.